part of the theme that we've been hearing over the last few months is that we have this synchronized global recovery. Then we've had some weakness and softness here in the U.S. and the reflation trade for Trump's agenda. But is that global synchronized recovery still intact?
The global recovery is absolutely intact, and what the IMF data is confirming what we've been seeing for some time, which is this isn't just a story about US growth getting better, it's about growth getting better in all major regions at the same time. And what's really interesting in 2017 and most recently is actually most of the surprises to global growth are now coming outside of the US. So US growth is holding up, but you're getting positive surprises here in Europe, positive surprises in Asia and in emerging markets.
So Mike Wilson over at Morgan Stanley says you want to buy the dip in U.S. equities because of this global growth story. What's your call for that?
Ultimately, we think the fundamentals are what drive markets. Investors often get caught up in short-term market movements, short-term noise. Last year, we learned that this short-term volatility needs to be looked through. You need to focus on what's ultimately going to drive markets, and that's about growth, it's about earnings. We think we're in a sustained recovery, a recovery which is broadening over time, and that creates a positive environment for owning risk assets. We own US equities. We'd actually prefer to take risk elsewhere, though. Areas like European stocks, like emerging market stocks, where there's less in the price than in some US stocks today.
And how do you factor in earnings in Europe as well as the U.S.? How are earnings beats going to be rewarded? Usually if you beat, you got rewarded. Is there a different bar this time?
Well, expectations are much lower in Europe and in emerging markets than they have been in the US. You're starting to see earnings pick up in Europe in particular, and we're potentially going to see double-digit earnings growth this year. But it's when we look at the valuations of those stocks that are beating, that what makes us more attracted to the European market and to emerging markets. So you're getting positive earnings momentum, you're getting upgrades coming through now in analysts' expectations, but the valuations don't yet fully reflect that good news.